What's up, Money Minds? Welcome back to Market Briefs Video Edition. Today is October 20th, and here's some business and financial news you can finally use. Yesterday, Facebook launched a digital wallet for cryptocurrencies called Novi. Even Coinbase got in on the action, announcing that it will be the one storing the cryptos Facebook offers to users who sign up early. The NBA also announced a partnership with Coinbase, the league's first crypto deal. Both companies traded in the green yesterday, with Facebook stock going up by around 1.33% and Coinbase rose by around 3.94%. That leads us into our October 19th market recap. The market ended the day just above the even mark. The S&P 500 continues to get a boost from strong earnings reports, easing investors' anxiety that rising costs will hurt Americans' profit recovery. The first Bitcoin ETF made its debut on the New York Stock Exchange yesterday as well. The ProShares Bitcoin Strategy ETF, BITO, rose 3% on its very first day. Next up in today's financial tip of the day, you better watch your step. Before you start thinking about investing, you should nail down a budget. After you've figured out a budget, it's time to take a deep dive into the investment world. You need to know what is out there and what is best for you. So if you want to learn a few things that you need to do before you start investing, our team wrote an article on this exact topic over on theminoritymindset.com, and I will link it for you in the description below. In our first main story of the day today, we'll be talking about earnings and how they're kind of coming up short. But before we get into all of that, my name's Nate from Minority Mindset News, and if you like this video, make sure to smash that thumbs up button below, hit that notification bell too, that way YouTube shows our videos to way more money minds around the world, and we can keep making videos just like this one. Here is our official earnings update. Two companies that are somehow based around the ampersand reported earnings yesterday: Johnson & Johnson and Procter & Gamble. Johnson & Johnson went up by around 2.15% yesterday, and it got a major boost from its vaccine, but overall it fell short on expectations. The company beat profit expectations but missed on its revenue forecast. Earnings per share were around $2.60 versus the $2.35 that were expected, and its revenue hit around $23.34 billion versus the $23.72 billion that was expected. But despite the slight miss, J&J rose in yesterday's trading session. The company increased its full-year guidance and maintained its outlook for COVID-19 vaccine sales. It sold around $502 million worth of its vaccine in the third quarter alone. On the flip side, we have Procter & Gamble, who dropped by around 1.57% yesterday. The consumer giant topped Wall Street estimates for its fiscal first quarter earnings and revenue. Earnings per share were around 1.61% versus the 1.59 that were expected, and revenue hit $20.34 billion versus the $19.9111 billion that was expected. Procter & Gamble raised its forecast for commodity and freight costs due to inflation and expects higher costs to keep damaging company profits. In our second main story of the day today, here's the report, but the GameStop edition. The SEC said that the online brokerages are turning stock trading into a game in order to encourage trading from inexperienced investors. That's a pretty major statement from the SEC, but Wall Street's main regulator stood by it. It said that some brokerages have strategies to increase revenue through payment and order flow, and they create incentives through these digital engagement practices. The report was around 44 pages long, but it did report how the entire GameStop fiasco went down. One thing the report did not do was name a specific cause or single out any entity. It did not drop any specific names. And that smells a little fishy. Payment for order flow is one of the top revenue sources for Robinhood, and Robinhood was right in the middle of the debacle, so we can only assume the SEC was referring to that platform. That is it for our main two stories of the day today, so let's take a quick break to talk about our sponsor, BlockFi. Don't you think it's finally time to earn some interest on your crypto? Well, with BlockFi, you can put your crypto to work. BlockFi is a platform that lets you passively buy crypto through either one-time purchases or recurring payments, and BlockFi pays you for keeping your crypto there. You can earn up to 8.25% APY with a BlockFi interest account, and there is no minimum required to earn interest. BlockFi even has a credit card that pays you with Bitcoin. It's like a cashback card, but instead of cash, it's Bitcoin. In addition, you can get a $250 bonus with a transfer of $100 or more into crypto. The more you transfer, the higher your bonuses will be. So if you're interested in investing in cryptocurrency with BlockFi, I will leave a link in the description below on exactly how you can do that. Big shout out to BlockFi for sponsoring this video, and now back to the news. This next news story goes out to all of the small but succeeding. Amazon has been under close supervision lately over suspected mistreatment of small businesses that sell on its site, claiming Amazon favors and advertises its own products more than the third-party sellers. Despite what regulators and antitrust watchdogs think, Amazon says its third-party sellers are treated fairly and even considered as the company's partners. Since launching the third-party marketplace, there are over 2 million small to medium-sized businesses on Amazon. The third-party sellers make up around 60% of all Amazon sales, selling over $3.8 billion products just last year. Watchdogs are convinced that Amazon rigged search results to favor its own brand of products over the sellers, but Amazon denies these claims and says the allegations go against its internal policies. Next up in our mind blown section, we've got to put this side hustle in the spotlight. The Detroit Free Press released a feature story about a man that took side hustling to a completely different level. Robert R.J. Woldhouse. The Detroit Free Press released a feature story about a man that took hustling to a completely different level. Robert R.J. Woldhouse made over $100,000 as a Shipt shopper in 2020 alone. And I don't think everybody had groceries delivered to them during the pandemic, so in case you don't know what Shipt is, it is a grocery delivery service that became popular when the pandemic first hit back in early 2020. As demand for groceries and delivery services peaked, some smart people took advantage and turned their side hustle into a lucrative gig. Robert's earnings in 2020 were mostly from tips and the money that Shipt pays per order. The best part though, Robert has developed a community of Shipt shoppers, helping people along the way to also make money delivering groceries. He's considered a mentor to many. In 2021, Robert expects to hit around $75,000 in earnings. And Robert told the Detroit Free Press that it's not too bad for a part-time hustle. If you want to be like Robert and take your side hustle to a whole new level, our team wrote an article on this exact topic over on theminoritymindset.com, and I will link it for you in the description below. Next up, let's pick your brain a bit and talk about how much higher gas prices can really go. At the moment, gas prices are at a 7-year high. The states with the highest average per gallon are Hawaii, California, and Nevada. Our advice though? Do a little bit of shopping and comparing before you just stop at any random gas station to fill up, unless you are completely on empty. Next up is our Money Mind section, where we pull comments directly from you all on our YouTube, Instagram, and TikTok accounts. Today's comment is from Monica Jones on our YouTube channel, and the comment reads, I think the pandemic has really taught people the importance of multiple streams of income. Unfortunately, having one job does not mean security. Multiple streams of income is ultra important, especially in today's day and age. The world is changing and so are the systems and practices we've relied on for ages. So that comment kinda nailed it. Next up in our Mind Break section, there just are not any Nigels anymore. Do you know anyone named Nigel? Well, probably not, and according to the Office for National Statistics, not a single baby was named Nigel in 2020, meaning the name is officially extinct. In 2020, there were also a whopping 0 babies named Carol, making the name extinct as well. Other names that are now considered endangered include Trevor and Stuart, with only 8 babies each claiming that name, and Gordon, with only 7 new little Gordons born throughout the world. On the other end though, Olivia and Oliver are the most popular names for last year. Money Minds, we are nearing the end of today's Market Briefs newsletter, but here's just a few more things to keep in mind. Local production of the Ford Mustang Mach-E officially began in China this week. The automaker wants to expand in the world's largest market for electric vehicles. Another thing to keep in mind this week is that Southwest Airlines officially dropped plans to put anti-vax staff on unpaid leave. The plan was supposed to go into effect after December 8th. In addition, despite an industry deal last week, there is a record amount of cargo ships waiting at ports in California. 157 ships remain at a standstill, and one last thing to keep in mind this week is that Instagram is letting users co-author on each other's posts. You'll also be able to share likes so nobody gets jealous. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you like this video, don't forget to hit that subscribe button below. Keep hustling, money minds, and I'll see you all in the next one.